Waves 1170.
1170 AM. It's Sunday night in the Caribbean, man. Hubert McIntosh is a member of the Society for Financial Awareness, and he's the man.
Financial literacy provided by Hubert McIntosh.
CPA.
Financial literacy. Control your financial status.
Here's your host, Hubert McIntosh, CPA.
Good evening, good Sunday evening to you. What a beautiful Sunday evening in South Florida, June 25th, 2017. Oh my gosh, can you believe half of the year has already passed? Oh my gosh, it was just the other day. It was January 1st when we introduced this program, and oh my, it has been a wonderful 6 months. I thank you for joining us, and I just want to give out a shout out to all the regular listeners. Oh, we have been getting so much feedback, thanking us for being on the radio and sharing insights with you guys. So I just want you all know who you are. So I just want to thank you all. Thank you from the bottom of our hearts, because when you're doing something, you always want to know, are you making a difference? Are you impacting people? And I can tell you, the feedback we get on the website, we get calls from people, we get comments on the website. So we just want to thank you all. And it's Hubert McIntosh, your CPA, a member of SOFA, the Society of for Financial Awareness, with one mission, oh my, to help eradicate financial illiteracy in America and around the world. Yes, around the world. Oh my, I just came from a conference with SOFA. We were in New Orleans, and SOFA had a booth. Oh, it's a SHRM, SHRM, Society for Human Resources Management. There were 15,500 attendees there. Yes, it was. And let me tell you, our booth, the response that we got at SOFA about people requesting financial literacy, employers from around the country and around the world. We had people from Jamaica, we had people from the Bahamas, we had people from France requesting financial literacy in the workplace. Yes. So the message is going out, one community at a time. So thank you for joining us here. And as I said, I've joined SOFA and I've started with this community. So thank you. So we are in the studio. Tonight's show, if you remember, I ended last week. We spoke about reverse mortgage. Wow. The last 3-4 weeks, we have basically almost targeted seniors. We spoke about reverse mortgage last week. The week before, we cleared up some stuff regarding Social Security. We spoke about long-term care. We spoke about Medicare, and all of those topics are topics of confusion. But what our aim and our goal is, when we come alongside you and provide the education, yes, in some cases, we're gonna eliminate the confusion. In other cases, we're gonna minimize the confusion. So I just want to thank you for joining us. Tonight, we're gonna talk about Refinancing 101. Yes, Refinancing 101. We're gonna share some insights regarding why refinancing, how does it work, and yes, the second half of the show, we have a special guest who's going to join us, Miss Lisa Lander, our mortgage specialist. Remember, a couple months ago, Lisa was in studio with us. She was in studio with us talking about mortgages. Well, tonight she's going to be back. She's joining us on air, and she is going to talk to us about Refinancing 101. She's coming on at the second half of the show, so she'll explain that. So you can prepare yourself for that. Get your paper, get your notes. If there are people that you need to call because there's some confusion regarding refinancing, and we can share some insights with them. So the first half, I'll talk to you, I'll introduce it to you. The second half, Miss Lisa Lander will be on as the mortgage specialist. And, so call people if you need to so that they can, as I said, never keep us a secret. We don't want you to keep us a secret. So that's why we have created a website, financialliteracy.info. Financialliteracy.info. We've created an email, support@financialliteracy.info. If you need to ask us any question, you can email us. You can call us. You can call us directly, 754-366-7311. 754-366-7311. Tonight we are in the studio. You can call us in the studio if you have any questions. The first part of the show or the second part, Miss Lisa Lander will be on. We are in the studio. The number is 954-792-1170. 954-792-1170. Next week, we're going to be talking about college planning. Yes, we're going to talk about college planning on the air next week. But I have a treat for you, for those of you who may be in the Palm Beach area. I am doing a college workshop not Saturday. Oh my gosh, I'm moving the week ahead. I'm doing a college workshop Tuesday night and Wednesday night in Palm Beach at Kaiser University. Yes, go on the website, financialliteracy.info. On the home page, you will see we have an event page of upcoming events. You will see the event for Tuesday and Wednesday. You can register. And guess what? It's free. Yes, it's a free college workshop. What we're going to do, we're going to clear up some of the confusions there. Yes, there are confusions there. So the title of Tuesday and Wednesday's workshop, it says, How to Pay for Your Child's College Education with as little out of pocket as possible. Yes, it's an insider's guide to getting maximum money for college. There are a lot of confusion about there with college. People think, well, I can't afford this, or I can't afford that. I can't afford this school, or I can't afford. Guys, there are so many, I won't call it tricks, but insider guide where we're going to share some of that. So as I said, if you're in the Palm Beach area, Tuesday and Wednesday, the workshop is from 6:30 to 7:30. Both nights, we have it Tuesday night, we have it Wednesday night. And next week, if you can't make it, we're going to share some insights with you about college planning also right here in the studio next week, Sunday night. So I just want to prep you for that. So thanks again for joining us. Remember, we are in the studio, 954-792-1170. So last week, we spoke about reverse mortgage. And one of the key part about reverse mortgage is factually, it's for people who are 62 years and older. You cannot get a reverse mortgage if you're under 62. You just cannot. So whether you want to call it, well, it's for seniors, but it's for people who are 62 and older. This week, we're going to talk about refinancing. Refinancing does not have an age limit. You can be 21, you can be 62, you can be 79. Whatever it is, you can refinance. And here it is again. There's some confusion regarding refinance. But one of the things I can tell you, and when Miss Lander comes on, she'll punctuate this better than me. Because of the current interest rate environment we have, some of you may have some loans that were taken out when interest rate was a bit higher. So with the current interest rate environment, sometimes it may make sense to refinance. But remember the phrase I'm using, it may make sense. Refinancing is not for everyone. But remember what I always encourage you. I always encourage you that any financial decision that you're gonna make, you need to seek a professional. Yes. Don't try to go it alone. We have people like myself. You have different people. You have people like Miss Lander who's going to come on. We're basically, your initial consultation. It's free. It's no cost. So be careful. Sometimes you hear people tell you, well, the initial consultation has a cost. Well, I'm not knocking. Don't get me wrong. I'm not knocking people who charge for the initial consultation. I'm not. It's a business. People do it. But you also have people who do it for free. And sometimes you may think, well, if it's free, it can be good. Oh my gosh, that is such a myth. So here I am on the radio show. It's free, and you're thinking it's not good. You check us out. You check us out. I'm a CPA. I'm a financial advisor. My wife and I, we have an office in West Palm Beach. We're speaking to clients daily, and they are paying. But we're coming alongside you, and it's totally free. It's totally free. And the encouragement, oh my gosh, I got a call this week from a lady. I tell you, every week we get different comments and we get different calls. But this week, the call was so special. Let me tell you, a lady called. She's 74 years old. She's 74 years old. Remember, we spoke about Social Security a couple of weeks ago. And the lady said she's been listening to us all year. And she called and she encouraged me and us that we should continue to do what we are doing. And the comment she made, and she said, I can use the comment. She said, since listening to this program in January, if she knew what she knows now, her life would be so different. She went on to be specific. She's 74 and she applied for Social Security at the age of 62. And I asked her why. But at that time, 12 years ago, you go back 12 years ago, she just kept hearing that Social Security is going to run out of money, and she did not want to take the chance of not getting any. So she applied, and she said, one of the things I can share with you, if she gets the opportunity, she will never tell anybody to take out Social Security at 62 without getting proper guidance. There are cases where it's good. We're not saying no one should ever take out Social Security at 62. That's not what we're saying. But you have to evaluate your options. So it's the same thing we started from the year where we're talking to you about helping you to develop a personal economic model, because financing, your personal financing, it's a personal thing. What Sally did or what Susie did, it doesn't necessarily that John should do the same. So I encourage you, get professional opinion. And sometimes don't get one. Get multiple ones. It's like going to the doctor. You get a bad result. A lot of times you want to get a second opinion and sometimes a third opinion. Once you reach a third opinion and all the opinions are the same, then this is something that you may need to take care of. So as I said, so I just wanted to point that out, and I just want to thank Miss Kathy, for calling in and just letting us know and encouraging us. So as we can see, we have been on the air for 6 months, and I thank you guys. Thank you so much. So let's get into refinancing. So refinancing, as I said before, it's one of those topics, as I said, can be confusing. But remember what we have always reminded you. Confusion is eliminated or decreased by education. Yes, education eliminates or decreases confusion. And that is what our hope in joining SOFA to do, so we can bring financial literacy. Because the study, remember, I remind you of that study by FINRA 2 years ago, that 2 years ago, 74% of Americans are financial illiterate. So let's ask yourself this. Do you think that 74% is the same? Is it lower or is it higher? I'm going to venture a guess. That 74% has increased. It's probably increased to 80%, where I can almost certainly say that 80% of Americans are financially illiterate. But because we're here, so our goal in this program is to help you so that in this community, we will be able to brag that we are not part of that 80%. So we are trying to dispel, we are striving to dispel that statistic, so we can say our community, we are financially literate. And if we don't know it, we know where to find it. As I said, we are here with you Sunday nights in the studio 9 to 10, but you have 24/7 access to us. You can go on the website, financialliteracy.info. financialliteracy.info. You can email us, support@financialliteracy.info, support@financialliteracy.info. You can call us directly, 754-366-7311. 754-366-7311. But tonight we are in the studio. You can call us in the studio, 954-792-1170. 954-792-1170. And we are looking forward to Miss Lisa Lander joining us the second part of the program. So let's go into refinancing. Yeah, I know you have heard me say that a couple of times. It all starts with, because you don't know, it all starts with an initial meeting. The best way to do it, find a mortgage consultant, find a mortgage specialist, have an initial meeting, and that mortgage specialist will share with you your loan options. They'll talk to you, and we're gonna have Miss Lander on at 9:30, midway around about there. Miss Lander will be here to share with that and go deeper dive into that. But that mortgage consultant, that mortgage specialist will talk to you about your loan options. She'll then if take a loan application to see where you are, and it will go further. I'm just giving you a scale of the process, where you open title and escrow, and then they take your credit score, whatever, then do a loan evaluation. And after a loan approval, a pre-approval, something like that, then they order appraisal, because then they have to appraise your house. They have to appraise your house to see what the house is valued, to identify what's your equity in the home, and so forth. And they'll send, as I said, you have title, escrow, and appraisal. They'll send for final approval. You'll sign the loan docs, then a little waiting period, and then it will be funded. But Miss Lander will go into that. So I'm not gonna go step over into her lane. She will deal with that better than me. So So, what are some of the key questions that you have to be concerned with when you're gonna do your refinancing? These are just thought questions to just trigger, how long have you owned your home? That's one of the questions you have to think of. How long have you owned your home? Sometimes if you recently own it, sometime it may not be beneficial. But as I said, we have the specialist coming on. I cannot tell you, when Miss Lander was on 2 months ago, we had some rave reviews. We have had people even call, follow up with her. So she'll be on and she'll share with you. Then one of the next question you have to consider is, how long will you own this home? How long will you own this home? Because sometimes it may be beneficial. The evaluation will be different if you're planning to own the home for 2-5 years. You're not even sure. And these are the some of the things that the mortgage specialist will go through with you. Oh, here's one of them I mentioned. What is your current interest rate? Because interest rate is at an all-time low. We've gone up a couple of just some small 0.25 or basis point, but we are still at an all-time low with interest rate. I'll never forget, and here I am dating myself now. I'll never forget the first home I bought, 1984. Oh my gosh, I just dated myself. I think the interest rate was 18%. 18% was the interest rate. So now when I see 3, 4, 4.5%, I'm like, oh my gosh. A lot of people don't realize that interest rate was 18% at one time. CDs used to give you 15, 18%. Yes. CDs, which was then called certificate of deposit, but it's still CDs, but now you have to call it certificate of depreciation, because if you have your money in a CD, let me tell you, it's depreciating. And you're like, Hubert, what are you talking about? They told me I'm getting 1.5% or 1%. Really? So you're getting 1.5%. When last have you checked the rate of inflation? If you're getting 1.5%, which I know it's very hard to get 1.5. To get 1.5, you may have to have $500,000 or some ridiculous amount of money to get 1.5. But if inflation is at 3% and you're getting 1.5, do you see why it's a certificate of depreciation? Because your money is not growing, your money is going down. Because if you have $100,000 in a CD and you're getting 1.5%, okay, all right, so you get $1,500 interest. Yeah, but the $100,000 just lost $3,000 buying power. It just lost $3,000 in buying power. So instead of you thinking that you gain 1,500, you're actually losing 1,500. Yes, I know tonight we're not talking about CDs, but since we're talking about interest rate, I wanted to interject that. So one of the things the mortgage specialist will look at is your current interest rate and to see what you'll be able to be approved for, and they'll do a calculation to see what works best, So personally, so they will be able to help you with that. Do you have other properties? Those are some of the consideration. If the home you're in, is this your dream home? Is this your dream home in the sense that, are you planning to be there 5, 10, 15, 20, 30 years? And the specialist will be able to share with you what may be beneficial. And that's some of those things that Miss Lander will clear up. Another question. Here's a key question. And this is one of those that is also very confusing. Very confusing. Do you want to lower your interest rate or lower your payment? So listen to the question. Do you want to lower your interest rate or lower your payment? Sometimes people say, but Hubert, it's the same question. No, it's not the same question. Lower your interest rate or lower your payment is not necessarily the same question. And I'm going to leave that. That's one of the questions. That's one of the questions we're going to ask Miss Lander. And she's going to clear that up. I'm going to leave that for her to clear up where it says, do you want to lower your interest rate or lower your payment? It's one of the key questions. It's one of the key questions to find out when you're going to do refinancing, okay? Another question. Do you have any credit issue since you purchased your home in the last year? Because if when you had bought your home prior and your credit was stellar, but if there have been some dings on your credit since, then we may have a little challenge there. But the mortgage consultant will clear that up. So some of the questions you're going to ask yourself is, why should I refinance? Why should I refinance? There are many answers, and I'll just read out a list. Monthly savings. You can save money monthly. That will refinance it with help. Sometimes you have other debts that you can do debt consolidation because you can take that money. You can take that money that with a credit card, debts and so forth. And if the interest rates are higher, then what you could do, you could refinance. You could take some money from the home, pay off the higher debt. So what happened is then you decrease your debt and you're paying a lower amount. Tax savings. Oh, come on. You think I would mention tax savings? Come on. I'm a CPA and a tax professional. You think I would mention tax savings? Tax savings is very critical. Yes, that's one of them. We mentioned lower interest rate. And sometimes you can do adjustable rate to a fixed rate. Sometimes you can combine two loans to one. Mortgage interest. Oh my gosh, remove mortgage insurance. Remove mortgage insurance. That is also one of those things that a refinance can help, because sometimes if you had gotten that original mortgage and you had put down less than 20%, sometimes you have that mortgage insurance. I've seen it where people refi because some equity have been built up, and they refi and they remove that mortgage insurance, So I'm telling you, so these are some of the reasons. And we're going to go into the detail, the second half of the show. Miss Lander will be joining us. And oh my gosh, we are looking forward to you. And for those of you who heard her before, I know you're looking forward to. So what we're going to do, she's going to join us on the other side of the break. As I said to you, Sunday night, 9 to 10 is the fastest hour in the week. So with that being said, stick and stay with us. We're going to break to pay some bills, and we will be right back, and we will be with Miss Lander. Stick and stay. Welcome back. Thank you for sticking and staying. We decided, the engineer decided, we wanted to give Miss Lander enough time, so we just gonna go straight in, because as I said, this is the shortest hour. And we want to give her enough time. Miss Lander, are you on the line? Hello, Lisa? Hello, Miss Lander?
Here.
Oh my gosh. Okay, you're here. Thank you for joining us. Yes, so the first half of the show I teed up. I don't know if you had a chance to listen, but girl,
Absolutely.
I have bigged you up so much that these people are expecting some miracles. So, I have put you on the spot. But seriously, I reminded the listeners that you joined us a couple months ago and you spoke about mortgages. You were in the studio then, and tonight you have called in. You're going to share with us some insights regarding refinancing. So I've shared with the listeners so far just a flow chart of the process and some of the key questions to be considered when planning to refinance, and I've also shared with them why should they refinance, and I'll just quickly relist the reasons that I put here for refinance. Sorry about that. And you'll be able to clear that up.
Absolutely.
So I mentioned to them monthly savings, debt consolidation, tax savings, lower interest rate. Wow. Something caught in my throat there. I apologize. Lower interest rate, adjustable to a fixed rate. Combine two loans to one, interest rate increase, and remove mortgage insurance. So if you can take it from that list, expound on that list, and share with, introduce yourself to our listeners, even though I've already mentioned it. Introduce yourself, give them your contact information so that they know that they'll be able to contact you. Right now, they can call in the studio, 954-792-1170, 954-792-1170. But I want them to also be able to reach you if they have any questions that they didn't want to discuss on air. So if you can go ahead, introduce yourself and give them your contact information.
Absolutely. Again, from Hubert, and I did hear your show, as usual. My name is Lisa Lander, and I've been in the business for about 30 years. I was originally licensed in 1986, and my job is to help people realize the dream of home ownership as well as some financial literacy along with you, so they can be able to afford other things that they may not be able to because of the current situation they may be in. I also do mortgage modifications for those that are in foreclosure to help bail them out of foreclosure. So, my job is to help people. That's what I'm here for.
Beautiful, beautiful. So, Lisa, one of the thing I mentioned to the listeners before you joined us, and I told them that I wasn't going to attempt to answer it. I have an answer, but I said I'm going to leave that answer for the mortgage specialist because I didn't want to cross over into your lane. So one of the question I told them that they have to consider is, do you want to lower your interest rate or lower your payment? And I kind of answered it myself. I says, okay, so someone may ask, but Hubert, you're saying lower your interest rate or lower your payment. Isn't it the same? And I said to them, no, it's not, but I am not going to answer further. I'm going to leave it to Miss Lander. So if you will just take it away and share with us, answer that question in your professional manner. Do you want to lower your interest rate or lower your payment? Just share with us what are the differences.
Well, every loan is structured differently. And as you had spoken before about the different things or reasons to refinance, you may currently have a 3% interest rate from purchasing a couple of years ago through FHA and only had put 3.5% down, but your mortgage insurance is probably something that, it hurts to look at every month.
Yes.
So, you may refinance with me, let's say today at 4.25%, and the interest rate's higher, but you're at less than 80% loan to value, and now we go conventional, and now there's no more mortgage insurance. So although your rate may have gone to 4.25%, which will have increased the principal and interest payment maybe by $20 or $30 because now you're borrowing less, etc. You just got rid of mortgage insurance that could be anywhere between $40 to $150 a month, depending on the size of the home. So there is where that question comes in, is when you restructure the loan, how can it save you money even though you may be at a higher interest rate? So I think that's part of where you were going with that, and that's very true. It's important for people to weigh the options. If you increase your payment monthly by $20, but you're getting rid of a $120 mortgage insurance payment, you're saving $100 a month. So that would be a key reason to refinance, because if you refinance, that's $30,000 over the life of the loan at $100 a month.
Wow. Well, folks, have you heard that? $100 saving per month. And sometimes we fail to realize that. But listen to what Miss Lander just said. That $100 is $30,000. $30,000. So sometimes you're thinking, well, it doesn't make sense because it's only $100. Well, you just heard it from the specialist. It's not just $100. It's $30,000. Oh my gosh, Lisa, thank you so much. And one other thing, and you and I have had this discussion with clients where we go into this discussion where a client will say, well, I want to change from a 30-year to a 15-year because I want to pay off my home faster. The last client we met, and the client mentioned that, and you spoke about it, explaining where if you want to pay it off faster, you can, but you don't have to necessarily put yourself in a 15-year crunch, but you can exercise the option if you choose to. Can you speak on that and just go into it and take it from there and point out to our listeners finding the right loans and the different type of loan? So you got the floor.
Absolutely. It's extraordinarily important when a client comes to you and I in reference to understanding a financial position and any hardships that may come up that are unforeseen. When people tell me they want to go with a 15-year loan, I really have to look at the income and the longevity of their employment. If there's anything coming up, a wedding for an older child or someone's going off to college, things that you and I discussed. And the issue is a lot of people would like to change to a 15-year to pay off more quickly. But most loans today, there are no prepayment penalties, so you may prepay as much as you like. So instead of tying yourself into probably about 1.5 times the payment you're paying now on a 30, what you can do is stay with that 30-year loan, and you can make extra principal payments on a monthly basis and bring that number down. So basically what we can do is run what's called an amortization schedule and show on paper, okay, if you pay an extra $120 a month instead of getting a 15-year loan, your loan will probably go down to X amount of years. The rule of thumb usually is if you make one extra principal payment per year,
right,
just per year, it knocks it down to like a 22 or 23 years instead of 30 years. So, I mean, that's, 7 years is pretty significant.
Wow.
So if you can afford to do more, then obviously that's what you do to bring it down more quickly. And that being said, the FHA loans, there's no prepayment penalty. Conventional loans, there's no prepayment penalty. VA loans, there's no prepayment penalty. There's also the USDA and some other options as well. But it's usually an option for you to be able to do what you want to do and not get into a crunch. God forbid something happens, then all of a sudden you've got to make this really large payment and you just can't do it.
Wow. Lisa, that is so powerful. My listeners, my friends, my family, I hope you just heard what Miss Lander says. One extra payment per year cuts off approximately 7 years. 7 years. And you're hearing it from the mortgage specialist. Sometimes you hear it from the accountant, the CPA. You wonder, how do I know? It's from talking and seeing what professionals like Miss Lander do. One extra payment. You did not tie yourself. You did not handcuff yourself to making those extra amount by doing it to a 15-year. So you're taking that same 30-year mortgage, making one extra payment, and you turn that into a 22.5-year mortgage. Oh my gosh, that is awesome. Go go. And remember, folks, we are in the studio, 954-792-1170, 954-792-1170. If you have any questions from Miss Lander, please feel free. Call in. You have her, and she's not charging. We have her tonight for free. For free, folks. So please call, please text, put it on Facebook. Text us 754-366-7311, 754-366-7311. We will answer the text. We will get the text. We'll relate the question to her. Call in the studio, text us. Okay? All right, Lisa, go ahead.
Well, there's some things along the lines of what you had said. It's not just getting rid of mortgage insurance. Sometimes people have a second mortgage on the home.
Mm-hmm.
And obviously the first mortgage, whatever that interest rate is, plus a second mortgage, whatever that interest rate is. And usually they originally got that second mortgage to consolidate debt. And then we end up with people that, unfortunately, they've consolidated the debt, they've got a second mortgage, now they've got more debt again. So a lot of the refinance is really, really heavily dependent on what you said before, getting the appraisal. Now, the process, as you were trying to explain, basically they call me, they talk to me for free. I'll be on the phone with them for 5 minutes if they want, or 2 hours if they want. It doesn't matter. I have no problem with that, to explain everything so they understand the process. So you take an application and you send in some preliminary documents, things like your tax returns, your pay stubs, your bank statements. And since it's a refinance, you'll need to find your old title policy if you have it. That will save you money at the closing table. You'll need to find your old survey if you have it. That will save you money at the closing table.
Okay.
And a copy of your insurance that you currently have on your home, etc. So, and one of your mortgage statements. So that list of items is pretty much what you would send to me document-wise so that I could fill out and finish the application and send it out. Then they send disclosures to you. And once the disclosures come back, at that point, we submit the file to underwriting for approval.
Okay.
When the file comes back as approved, at that point, we then order title work and the appraisal.
Okay.
And then we'll know at that time what the property is valued at. I had actually they're best friends of my sister's for years, and they thought their house was worth $265, and it came in at $185.
Wow.
Yeah, so it's very important if you have a realtor friend or if you know what some of the sales are in your neighborhood, don't expect that your house is worth $1 million if the sales in your neighborhood are around 200. Doesn't work that way.
Wow.
So it's really important also to know if you can make that move and be able to do that, because you do have to spend the money to purchase the appraisal.
Wow.
And those are around $450 to $500 these days. So, I want to make sure prior to anybody spending any money or doing anything that they shouldn't, I want to make sure they're approved for the loan. I want to make sure that it's a realistic goal as far as what the properties are valued at, things that like that. And VA, for any of the veterans that are out there listening, it is zero down, and the seller can pick up the closing costs, and I want to see my vets off the streets. And for those everybody else that's out there with very little cash, 3.5% down, the seller can pick up the closing costs. I can pick up to 2.5% of closing costs if the seller doesn't cover them all. We want to see everybody be able to realize homeownership.
Wow. Lisa, you touched on something, and last week I spoke a little, I spoke on reverse mortgage, and you just touched on a point there, and I'm going to ask you, I want you to re-emphasize or clear up some of my possibly confusion if I was confused. One of the things I was sharing with the seniors last week regarding reverse mortgage, where there are situations where I see people where they have equity in their home, or they may even have a free and clear home, and then that person is living a life of poverty even though they have a home that's free and clear, where they're not even eating properly. And what you're just saying here, so I'm going to ask you two questions in one to speak on that, regarding, and I have a follow-up to that. So can you speak on that for a minute, please?
Well, reverse mortgages have changed substantially in the last 5 years, and that's a really good thing. They used to not be so great.
Yes.
Today, they're fantastic because now they've put in certain caution stops to ensure that not only do you get the reverse mortgage, but that there's money left over on a monthly basis, excuse me, to make sure that the household is paid for, the taxes and the insurance are paid for, what have you. And I think one of the biggest misconceptions of reverse mortgage is that once somebody passes away, then the house goes away. That's not correct. And that's a big deterrent. I mean, I hear that all the time. Well, what if I die? Then what happens? Well, you brought up the point earlier that you have to be 62.
Yes.
Not only do you have to be 62, the youngest spouse has to be 62.
Right.
And that didn't used to be the case, and there were a lot of foreclosures that happened because, let's say the gentleman was 65 and his wife was 58.
Yes.
She was not of qualifying age. He passed away, and now all of a sudden they wanted to foreclose because the person that was qualified for the loan is gone. So all that's gone now. None of that exists anymore. They've put all these stops in place to protect the people that would like to get the reverse mortgage. They make sure there's enough money left over at the end of the month. There is some qualifying to it now. There's not only if there's equity in the house, could you maybe not have a payment, but if there's exorbitant amount of equity in the house, you can get paid. So people may not understand that they may actually end up getting an income from the equity of the property.
Yes.
So that's important. You know, people are on Social Security. It doesn't pay you anything. You're sitting in a house that's free and clear, and you could be making an extra $100, $400, $800 a month off of the equity in your home.
Oh my gosh, Lisa, thank you. I know my listeners probably think I set you up for that, but folks, I did not even know that. But you just punctuated some of the stuff I shared last week. Just this past week, I was with a friend and a client. You know, he came in with his mom where she's talking about, retirement and getting ready. And I was sharing some of that information where with this reverse mortgage, you have it and you're getting an equity line of credit, and that credit is increasing irrespective of the home value increasing. So I thank you so much. So the second part of the question I want you to also share with our listeners is, like for instance, and as a tax professional, as a CPA, my mind is always thinking tax. Tax is the first thing I'm thinking. Yeah. So people will come, and I want you to speak on this topic. They're planning to buy a car. They're planning to buy a car or to pay off a car. Please speak to our listeners about the possibility of using a HELOC to do that. Talk about the pros and the cons. So go ahead and answer help us with that answer.
Okay. A HELOC is home equity line of credit.
Mm-hmm.
It takes second position to your first mortgage. There are qualifying stops for that as well. You have to be able to afford, obviously, your first payment as well as now the HELOC payment. And they will not usually allow you to exceed a maximum of 90% loan to value. So if your first mortgage, you're at 75% loan to value, your HELOC will be the additional 15% loan to value. So they don't let you exceed a certain amount of what your house is worth. They always want some equity in there. Now, there are some banks that I work with. I'm not with them, but I would send people to them that are extremely good at doing HELOCs. And the last time I checked, they were at 2.5% interest. They used to do them interest only because that would get people in trouble. They are now principal and interest.
Okay.
So that you don't get into I've got a really low payment, and then 5 years down the road, all of a sudden I have this huge payment because now I have principal and interest, and I have to pay it off in a short amount of time. So they got rid of that. It's now principal and interest across the board. That's another protection that they've put in place for the consumers.
Yes.
If you can buy a car and only pay 2.5% interest versus buying a car and paying 6 or 8% interest, then I guess you go right back to Hubert's line because obviously you're going to save the funds, and the equity in your home usually continues to build. Obviously, we had a bubble several years ago. The lenders and the community are trying to be very conservative with loan values to try and make sure that that doesn't ever happen again. And obviously, you know, a HELOC, a home equity line of credit, your credit cards can be anywhere between 0% to 22% interest. A HELOC, paying that off, you're back down to 2%, and you can combine all of those and get a much lower payment and pay it all off more quickly. That puts you in a much more stable position. You can purchase things like a house or a boat at a much lower interest rate, and all of the interest is tax deductible.
I kept waiting, and I'm like, is she gonna give me the plug? Is she gonna give me a plug? Yes, it's folks, you heard what she said. She's not a CPA, she's not a tax, but you heard it from her. The interest payment is tax deductible. Oh my gosh. Thank you, Lisa. Thank you so much. So Lisa, talk to people, because there's some confusion about it now. Talk to people about their credit, Talk to them about their credit, their income, and their assets. Last week I spoke about Nina. You know, Nina is no longer anymore. Nina died a few years back. I remember Nina.
Yeah.
No income, no asset verification. So share with people, because sometimes people are thinking, oh, I won't be qualified for this. Share with them about their credit, their income, and their assets. Go ahead.
Well, in today's market, assets are not quite as important, especially since it's not a Nina loan. Assets are not quite as important. Having good, strong employment for income, being at your job for 2 years or more, or sometimes a year or more if you've been in the same field for a long time. So there's always some things. I mean, you may be going from one company to the next, and you just changed jobs last month, but you've already got a month's worth of paychecks, and it's in the same field. Well, that's a good reason to change jobs, obviously, and you've been there for a month and we know what your pay is. We can accept that. So don't think, oh, I just changed jobs and I can't do that. Every scenario is different. So employment and income is extraordinarily important. That's probably one of the most paramount things. Secondary to that is your credit. A lot of people are suffering with low credit. A lot of the economy is very poor, et cetera. So one of the most important things to remember is be very careful and cautious going to people that fix credit, because a lot of them want to just say, okay, well, we're going to tell the credit bureaus that this doesn't belong to you. And they're going to say, you know, we're going to say that this doesn't belong to you, and we're going to have them, you know, remove it. So if they don't act in 30 days, they have to take it off. Well, that doesn't always work. And what happens is when you come to a mortgage company, we pull a tri-merged report that's very, very detailed. And anything that's been put on hold like that, we have to tell you to take it off. So as soon as there's a change to your credit score goes right back in the trash again. So whether you do something good, like pay off a collection, or do something bad, like miss a couple of payments, anytime there's a major change to your credit, it dumps your scores. So basically what happens is the algorithms go, oh, wait, there's a huge change. We're gonna drop your score and wait and see how they handle it. That's basically what happens.
Wow.
So the best thing that you can do is be consistent. If you have low scores because you haven't really had any credit in a few years and you had some issues in the past, a suggestion would be go on Credit Karma. It's free. And see what your score is. See if they make an offer for a very low valued card, say $200-300 is the total of the card, and buy something for $10 and pay it off for the month. Buy something for $10 and pay it off next month. And what that does is it shows the credit bureaus that you now are responsibly making monthly payments. That will drive your credit score up 20, 30, 40 points, depending on where you're at and what's going on with your credit. So, you know, you can bring your credit scores up. And that's a whole other thing. Interest rates today are score-driven, without a doubt. Now, in my case, because I work with independent lenders, I can do a credit score as low as 500.
Wow.
Yeah,
500.
500. But, there's a but, between 500 and 580 FHA, they have to put 10% down. So you have to
Okay.
come up with 10% of the purchase price of the house if your score is that low. But it can be done. So, in order for you to get decent credit or decent interest rates on credit scores, you really want to be over 680 for them to be in the good range. And obviously, higher credit scores they take little minuses off. Okay, we'll take an eighth off because they have a 750 credit score. So you get a little bit better pricing the better your credit is, obviously. Doesn't mean we can't do it. Doesn't mean you can't realize that dream of home ownership if your credit score is only a 580, but you may have to put 10% down. So, like I said, every scenario is different. And like I said, 5 minutes if you want with me or 2 hours if you want with me. It doesn't matter.
Wow. Well, Lisa, Sunday nights 9 to 10 is the fastest hour. So take the next minute, tell the listeners about the different types like FHA or VA, and tell them what you can do. Give them your contact information. So basically, take that minute and then you plug yourself. You go ahead, because we know how good you are. They don't know. And I know I have seen you do magic. So you tell the listeners what they can expect from you in calling you. Give them your information. Let them know how to reach you. They know they can reach you through us, but you go ahead and let them know how they can reach you also and what they can expect from you. Take a minute and do that. Time is up on us. Okay? Go ahead.
Okay. Whatever you need. If you need mortgage modification, if you're in foreclosure, if you need a reverse mortgage, if you need conventional, which is Fannie or Freddie, which is usually 5% down, if you need FHA, which is usually 3.5% down with any credit score over 580, if you're a veteran and you want a VA, you have your certificate of eligibility. Any of those items I am fully available for and have been doing them for many, many years. My phone number to reach me at is 561-307-6650. That's 561-307-6650. And my hours, unfortunately, of operation are 8 a.m. till 9 p.m. Monday to Sunday. So I'm pretty much available.
Well, oh my gosh. Well, Lisa, I want to thank you. Thank you for coming on. Thank you for your insights, folks. That's Miss Lisa Lander, our mortgage specialist. So we want to thank her for coming on. She gave you her information. If not, you can reach us and we'll plug you to her. Financialliteracy.info, financialliteracy.info. The number, you can call us directly, 754-366-7311, 754-366-7311. You can email us, support@financialliteracy.info. And remember, next week we're going to talk about college planning. We have the college workshop Tuesday and Wednesday. Go on the website, financialliteracy.info. On the home page, it will give you a link where you can go and you can register to come to the event. So thank you for joining us. It is Hubert McIntosh, your CPA and a member of SOFA. Have a great evening.
Financial literacy with Hubert McIntosh on Waves 1170 has come to an end.